Today we're going to go over some amortization and some depletion of intangible assets or natural resources. I've got some information stated up here. We've got three different scenarios. One, timber rights on a tract of land were purchased for $600,000 on February 22nd. The standard timber is estimated at 3 million board feet. During the current year, 800,000 board feet of timber were cut and sold. So let's just completely handle this and then we'll move on to the next one. Okay, anytime you're dealing with depletion or natural resources, it's going to be handled in a way that is very similar to the units of output method of accounting. So what you do is you come up with a rate. And let's just come over here to do some math. And let me show you how we're going to do this. It's going to be equal to, okay, the cost divided by the total expected amount that you're going to extract or somehow harvest. Okay, that right there gives us a rate. So for every board foot of timber that we take out, we're going to give it 20 cents worth of depletion. Okay, and let me copy that down and show you the formula again. Okay, that's how we did that. So now what we need to know is in one particular year, what is the amount that was extracted? So we have this 800,000. Let's go ahead and do the next calculation. 800,000 times this rate right here. Okay, we would give this a depletion expense of $160,000. Okay. So your answer for A, it says determine the amount of amortization, depletion, or impairment for the current year for each of the foregoing items. Do not round. Intermediate calculation. Okay, our answer to this one is the $160,000. Okay. Yeah, let's get some commas in this right here because I like my commas. Okay, here's the $160,000. And let's go ahead and make the entry for that. It says that we're doing this on December 31st. These are adjusting entries, so we're going to date them all. Yeah, I messed that up. We're going to date them all as of the end of the year. Okay, so on 12/31, we are going to debit depletion expense for $160,000. And we're going to credit accumulated depletion for $160,000. Okay, and that takes care of that one. Now we move to B. It says on December 31st, the company determined that $910,000 of goodwill was impaired. Okay, something happened that we have an impairment issue going on. This is an intangible asset. Intangible assets, like any asset, have a normal debit balance. And so to take care of this impairment, we are going to actually credit the intangible asset called goodwill to reduce it. And we're going to take a loss on the impairment. So the amount of the impairment is just the $910,000. So don't make that any harder than it has to be. And let's go ahead and make the entry. This is also 12/31. We're just going to put loss on impairment. Now, Cengage may have a slightly different name, but it's going to be a loss on something. You'll be able to figure it out when you're using your drop-down boxes or whatever, making your choices. So that's going to be $910,000. And then again, we are going to credit the asset itself, and we said this was goodwill. Okay, so we have taken care of that. Goodwill will be reduced by $910,000. The next one, it says governmental and legal costs of this amount were incurred on April 3rd in obtaining a patent with an estimated economic life of 12 years. Amortization is to be for 3/4 of a year. Okay, the amortization of an intangible asset in this case is going to be very similar to the straight line depreciation. So what we're going to do, we'll come over here for this calculation. We're going to take the entire cost, 3840, 1, 2, 3 more zeros, and we're going to divide it by 12. Okay, so in any given year, that will be the amount, except the first year, because we have this partial year. Okay, so that's the full year amount. But since it's a partial year, we are going to go ahead and take 3/4 of a year. So we should just be able to take this amount right here, multiply it times 3/4. See that right there? And that's going to give us the amount. So our amortization for that year will be the $240,000. Okay. Come down here and let's go ahead and take care of this one. Okay, so we're going to have amortization expense for $240,000. And for intangible assets, there is no accumulated amortization account like there is on depletion and depreciation. Theoretically, since the asset does not exist physically, we do not have to maintain both the original cost and an accumulated amount. We are going to directly reduce the value of the asset itself. So we are going to credit the patent $240,000. Okay, and that's all three of them right there. Hopefully that helps. Let me know if you need any more help. I'd be glad to figure something out with you.